Okay, let's take up 6-1. I'll go back to 6-1 because only the 8:30 class was able to take this. So for the benefit of the rest of the members of the group, then I'll begin with 6-1. Okay. Now the cost of production summaries, one department, 2 months, journal entries, data for January and February in the mixing department of cleaning products follow. So we have now the data for January and February. Materials used, labor, factory overhead, finished and transferred to blending. We have the work in process at the end of the month, stage of completion. So we are now given the data in the mixing department, the initial department, and the goods completed in the mixing department will be transferred to the blending department. All materials are added at the start of the process. Labor and factory overhead are added evenly throughout the process. No units were in process at the beginning of January. Goods finished in the mixing are transferred to blending for further processing. From an analysis, prepare a cost production summary for each month using the weighted average cost method. Now, make sure that you are aware of what is the method used. So this time now we have the weighted average. So we have now the cost of production for the month given are the materials, labor, and factory overhead cost. So the total cost to be accounted for is 46,400. Now for the unit output for the month, we are not given the units started nor the units in the in process beginning, but we are given the units transferred, and we are given also the equivalent units of work in process at the end of the month. 400 units, three-fourths completed all materials. So in other words, the units to be accounted for is just equal to the units accounted for, which is the sum of 3,600 units finished and the ending work in process of 400 units. So we have 4,000 units. Then for the labor and factory overhead, finished and transferred to blending, 3,600, and the equivalent units of work in process at the end of the month for labor and factory overhead is three-fourths. So we have 300, leading to the equivalent production for labor and factory overhead equal to 3,900. But for the materials, the equivalent production of the materials in the work in process at the end is uh, full or complete up to 400 units in the ending inventory because as stated, all materials are added at the start of the process. So for the unit cost for the month, we have the material total cost divided by the equivalent production for materials. Then you have labor and factory overhead. The total cost per unit is 11.82. Now, the total cost to be accounted for is 46,600. That should equal the total cost to be two total cost accounted for. Now, if the cost to be accounted for is 46,600, the accounted for is short by $2. It's due to the rounding off difference. But again, if you carry up to the last 5 decimal places for the unit cost, now you will get the uh, exact amount of 46,600. Now for the cost of goods finished and transferred to blending, 3,600 units, we multiply by the unit cost of 11.82. you get 42,552. And the cost of the work in process at the end of the month, we have 400 units for materials, then multiplied by 5, labor 400 times 3/4, or the EP of 300 times the cost per unit. The same with factory overhead. So we have now your total production cost to be accounted for is now equal to the cost accounted for. Now in 6.1, the second requirement is make the journal entries for each month to record the cost of materials, labor, and factory overhead used in production and the transfer of the units from the mixing to the blending. Now we have for the entries in January 31 and February 28. And by the way, we have the records now shown for the months of January and February. For the month of February, we have now the cost of the work in process beginning, which are given for 3,600 or mean materials 2,000, labor 1,169, and factory overhead 877 coming from the report in January. So you have the cost, the work in process, and in January is the work in process beginning in February. So in other words, the cost of the work in process and now with a total of 4,046, this becomes the work in process beginning in February. So we have now 4,046. Then we have the cost of production for the month of February for materials, labor, and factory overhead, all given. So we have the total cost to be accounted for in February of 75,246. Now, for the unit output for the month, for the units to be accounted for, we have the units received no, from the mixing department. We have a total of 3,600 units. So that's now the units received from the mixing department. And some of these units are in process at the end of the period. So meaning we have the total units to be accounted for of now we have the finished and transferred to the blending department equals 3,200 and the work in process at the end of the period equal to 600. All in all, the total is 3,800 units. Okay? Okay? So if you have now the total units accounted for of 3,800 units. Now we have our equivalent production for materials finished and transferred to the blending department here. Amuni ang aton nga 3,200, which units are received by the blending department. So bali ang aton nga mixing department now with the cost in February, no? In February, we have the cost of the work beginning and the cost of production for the month, giving us the total cost to be accounted for. Then the unit output for the month, finished and transferred to blending during the month of February, 3,200. And then the units in process at the end of the month, 600 units, 1/4 completed all materials because materials are added at the beginning of the process. So the equivalent production for materials is 3,800. Then for labor and factory overhead, again is 3,200, and we have now the units equivalent units for the labor and factory overhead. 600 units times 1/4 equals 150. The equivalent production is 3,350. For the unit cost, we have now, we add the material unit cost beginning, then we add the cost of production for the month. We divide by the equivalent production for materials of 3,800. Then for labor and factory overhead, we now divide this by 3,350, which is the equivalent production for labor and for factory overhead. So for the inventory cost, the cost of goods finished and transferred to blending is 68,438. That's now 3,200 units times 21.387. 21.387. Then we have the total cost of the work in process at the end of the month, 600 units times 8. Then here, 150 units ang iyang equivalent production. For the unit cost is 7.215, and for factory overhead, we have the cost of 926. So the total cost to accounted for is now equal to the total cost to be accounted for. So take note, we are now dealing with the months of January and February. So for the cost of goods finished and transferred to blending ini during January, transferred to blending. That's from mixing to blending. However, we still have the next report referring to the month of February, where we carry the cost for the work in process beginning. So we now involve again the cost of goods transferred to the blending department now during the month of February. Now, this is problem 6-1, and make the journal entries for each month to record the cost of materials, labor, and factory overhead used in production and transfer of the finished units from the mixing to the blending department. Now, for the journal entries on January 31, we record debit to work in process mixing and credit materials, work in process mixing and credit payroll, and work in process mixing and credit factory overhead for the cost given in the problem for the cost incurred during the month. Then for the work in process blending, 42,552 and credit to work in process mixing. Now we have the amount of 42,552. The cost of goods finished in the mixing and transferred to blending during the month of January. Then we have in February, we again debit work in process mixing for the given amount of material cost, materials given at 28,400. We have labor and factory overhead. Finally, debit to work in process blending and credit to work in process mixing. Now this time for the cost of the units transferred from the mixing to the blending. Now we go to 6.2, cost of production summaries, one department but with 2 months journal entries. So required from an analysis of this information, prepare a cost of production summary for each month using the weighted average cost method, round unit cost to the nearest 3. All materials are added at the start of the process. Labor and factory overhead are added evenly throughout the process. No units were in process at the beginning of June. Goods finished in blending are transferred to bottling for further processing. So we have now the cost of materials, labor, and factory overhead for June and July. And we have the finished and transferred to bottling, work in process at the end of the month, and stage of completion. So now for 6.2, in the cost of production report for June 30, we have the cost to be accounted for with a total of 72,600. Now for the unit output, we have the units finished in the blending and transferred to bottling, and we have the work in process at the end of the month, 500 units. All materials, meaning we have materials fully applied. And for the equivalent production of materials of 3,300. Now for the labor and factory overhead, we have the equivalent production of the 500 units only at 375. So the total equivalent production is 3175. For the unit cost, we are now dividing the cost for the month by the equivalent production. So we get a cost per unit of 22.508. For the inventory cost of goods finished and transferred to bottling for 2,800 units. So we now have 2,800 units in the blending department. And we have the cost per unit here of 22.508. Then we add the cost of the work in process at the end of the month. Materials, 500 times 9.091. Labor is only with an EP of 375 times the cost per unit, and the same with factory overhead. So we have again a rounding off difference of 1 peso because the total cost to be accounted for is equal to 72,600. 72,600. Now, for the second requirement of 6.2, make the journal entries for each month to record the cost incurred or used in production and the transfer of the finished units from blending to bottling. So our journal entries in 6 dash 2 will be prepared, and of course we have to prepare the cost to production summary in the blending department for the month of July. So again, take note that we have prepared the cost production reports in the blending department for the month of June, and finally, we have this for the month of July. So we have now the cost of the work in process beginning of the month found in the report in June. We have now the cost of production for the month as given in the problem, the cost of materials, labor, and factory overhead. So the total cost to be accounted for is 114,777. For the unit output for the month, finished and transferred to bottling is 3,600 units, and then we have the work in process at the end of the month of 400 units. So we have all materials because all the materials are added at the start of the process. Whereas for the equivalent production of labor and factory overhead, for the ending inventory, it's only one-fourth completed. That's the stage of work done, giving the total equivalent production of only 3,700 for labor and factory overhead. Unit cost for the month is taken by first we add the material cost of the work beginning and the cost of production for the month. Then the total, we divide it by the equivalent production for materials, 4,000, and for labor and factory overhead is 3,700. So we now get your cost per unit, giving the cost per unit of 29.860. So that's the cost of the goods finished. Now transferred to the bottling department, 3,600 units times 29.860. And then the work in process at the end for the equivalent production of materials, 400, for labor and factory overhead, 100 times the cost per unit. So the total cost to be accounted for of 114,077 is now accounted for, but only with a rounding of difference of 114. Uh, the accounted for is 114,079, giving a difference of $2. Okay, now we go to the journal entries from work in process blending. We credit to materials. Second, we credit to payroll. Third, we credit to factory overhead. So we debit now work in process bottling and credit to work in process blending. So July 31, we again record the cost of materials, labor, and factory overhead. And finally, debit to work in process for bottling and credit to work in process blending. So you got the journal entries in 6-2. Now for 6-3, we are asked to prepare the journal entries to record the above December transactions. On December 1, Carmel Valley Production Incorporated had a work in process inventory of 1,200 units that were complete as to materials and 50% as to labor and overhead. December 1 costs follow. So materials, labor, and overhead. During December, the following transactions occurred. A. Purchased materials costing 50,000 on account. Placed direct materials costing 49,000 into production. Incurred production wages and overhead costs. Then applied factory overhead, completed and transferred 10,000 units. So we now prepare the journal entries. Let's begin with debit to materials for 50,000. That's letter A, credit to accounts payable. Kaya nga, it's on account. Then B, we debit to work in process 49,000 and credit to materials. C, debit to work in process and credit to payroll. D, debit factory overhead for the following. So the credits are accumulated depreciation, 20,000. We credit to cash for 28,000 and 11,000. So 39,000. And credit to supplies inventory for 2,000. All of these are debited to factory overhead. Then we now debit to work in process for 50,500 times 1.25 of direct labor cost. Direct labor cost is 50,500. Now, as stated, applied overhead to work in process at a predetermined rate of 125% of direct labor cost. Direct labor cost of 50,500 multiplied by 125%. So we get 63,125 and credit to factory overhead or factory overhead applied. Then in letter F, completed and transferred 10,000 units to finished goods. He and you should first compute equivalent units and unit cost. The unit cost should include applied, not actual factory overhead. Carmel uses the weighted average cost method. The ending inventory of work in process consisted of 1,000 units that were completed as to materials and 25% complete as to labor and overhead. So the next entry now is to debit F, finished goods inventory, credit to work in process by 164,700. Now we have the computations here. So we have now the determination of cost transferred to finished goods for materials, labor, and overhead, units combined for 10,000 units. The equivalent units in the ending inventory, all materials, and 25% labor and overhead. So 1,000 units that were completed as to materials and 25% complete as to labor and overhead. So we now get the total of 11,010 to 50 for labor and overhead. So for the work in process beginning, we are given the amounts of uh, 6,000 materials, 2,000 labor, 2,000 overhead, the total of 10,000. Now we are given also the current cost for uh, current cost of materials 49,000 and 3B, and then for labor and 3C, and factory overhead applied to production and 3E, for the total cost of 162,625. So what we added to factory overhead is the applied amount, not the actual. The total cost of production total 172,625 divided by the equivalent units of production. So we get the unit cost of materials, labor, and factory overhead at 16.47. Transferred out is 10,000 units for the units completed multiplied by 16.47. So that's our debit to finished goods and credit to work in process for our entries in 6-3. Next, we go to 6-4. Actually, in 6-4, we have 3 departments, and prepare a cost production report for each department for January using the weighted average method. Prepare journal entries for the January transactions. And number 3, prepare a statement of cost of goods manufactured for the month ended January 31. Akron Manufacturing Company manufactures a cement sealing compound called Sealrite. The process requires that the product pass through 3 departments. In Department 1, all the materials are put into production at the beginning of the process. Department 2, materials are put into production evenly throughout the process. And in Department 3, all materials are put into production at the end of the process. In each department, it's assumed that the labor and factory overhead are applied evenly throughout the process. At the end of January, the production reports for the month show the following. So we have in Department 1 started 50,000 units, finished 40,000, in process at the end is 10,000, and only with the stage work done, no one half. We are given the cost summary. for the month of January for the three departments. So in the cost of production report, we now have the materials, labor, and factory overhead for the month of January, thus the total cost to be accounted for in Department 1 for the month of January. The unit output for the month, the materials, finished and transferred to Department 2 during the month of 40,000. Amo na ang imong units completed and transferred to the next department. For the in-process at the end, we have 10,000 units, one half completed but all materials. So the equivalent production for materials is 50,000. While the equivalent production for the labor and factory overhead is only one half. So we multiply 10,000 by one half, we get 5,000, giving the total equivalent production equal to 45,000. So for the unit cost for the month, we divide 22,500, the cost of production for the month, we get 0.45. Labor and factory overhead will each be divided in determining the unit labor cost divided by 45,000. So all materials, however, if we consider now our labor and factory overhead equivalent productions only 45,000. So we now get the total production cost. Total cost to be accounted for is equal to the total cost accounted for. Then we go to the report of Department 2 with the cost of goods received from Department 1 during the month. From Department 1, there are 40,000 units transferred to Department 2. And each of these units now, each carries a unit cost of 0.85. So we now transfer to Department 2 the cost of goods received from Department 1 during the month. So we have now your cost of goods received of 34,000. Then we add the cost of production for the month given are the cost of materials equal to 23,200. Then labor 14,500 and factory overhead the same. So we have now the total cost to be accounted for of 86,200. The unit output for the month, materials, labor, and factory overhead, finished and transferred to Department 3 during the month, 30,000, and finished and on hand, 5,000. And equivalent units, work in process at the end is 5,000. So all in all, that makes 40,000 units. We are now in Department 2. Units to be accounted for are here. In Department 2, units to be accounted for are separated for 40,000, 30,000, finished 5,000, finished but on hand, and 5,000 for the work in process and but the work done is only one fourth. So in Department 2, we have now your unit output for the month, finished and transferred to Department 3, 30,000, finished and on hand for 5,000, and we have the work in process at the end of the month 5,000 units. So we have one fourth completed, so you get 1,250. That's in Department 2, the total equivalent production. So the unit cost for the month now taken by dividing the material unit cost by its equivalent production. So we now get 36,250. The same with labor and factory overhead. So we have the cost per unit. Take note that here we have only one equivalent production that applies to materials, labor, and factory overhead. Now, the problem stating that all the process requires that the product pass through three departments. In Department 1, all materials are put into production at the beginning of the process. In Department 2, materials are put into production evenly throughout the process, together with labor and factory overhead. That's why we have only one equivalent production. And in Department 3, materials are put into production at the end of the process. So we now get the inventory cost. For the cost in Department 1, 30,000 units times 0.85, and the cost in Department 2 of 30,000 units times 1.44. Now you have the cost here. So the total, we have the cost of goods finished and transferred to Department 3. For the cost of goods finished but on hand, we have 5,000 units times 85 and times 1.44. It's just like the cost of goods finished and transferred to Department 3. And finally, we have the cost of the work in process. At the end of the month, we have the cost in Department 1 of the in process inventory at 0.85. Then the cost in Department 2, materials 5,000 units times 1/4. Take note that in Department 2, all the materials are put evenly into production, just like your labor and factory overhead. So we have now the ending inventory of 5,000 units, the cost in Department 1, and we have this cost in Department 2 with the prevailing unit cost of 0.64, 0.40 for labor and for factory overhead. Now, this is the requirement of problem 6-4. We still have the journal entries to record the January transactions and to prepare a statement of cost of goods manufactured. Okay, still 6-4. Okay, prior to requirement number 3, we have requirement number 2 for the summary of production cost. Now, though we have already finished the cost of production reports for departments 1, 2, and 3. So, department 1's report. Okay, then we have the report of department 2. And finally, the report of Department 3. Cost of goods received from Department 2 during the month of 68,700 as taken from the previous department's report. Then we add the cost of materials, labor, and factory overhead from Department 3, the total cost to be accounted for. Then for the unit output, in Department 3, units started 30,000. Then finished and transferred 28,000 and the inventory of 2,000. So we now get the cost of finished and transferred units, the equivalent units of work in process at the end of the month is 0. So the total equivalent production is 28,000. For labor and factory overhead, we have finished and transferred for during the month 28,000. Equivalent units of work in process at the end of the month is 2,000 units. The ending inventory multiplied by 3/4 complete the given stage of work done. So we have the equivalent production total of 29,500. Then the unit cost for the month, we have the materials 19,600 divided by 28,000 units for the equivalent production during the month. Then we have labor here. Cost in Department 1, the cost per unit. Cost in Department 2, 1.44. And the cost in Department 3 at 1.40. So uh, we have now the materials for the work in process, and it's 0, we are now in Department 3, and as stated, in Department 3, materials are added at the end of the period. So meaning, for the ending inventory of work in process, in Department 3, materials applied is 0 because materials are applied only at the end of the process. So we have labor, the EP, equivalent to 3/4. So the EP is 1,500 for labor, and then we multiply this by the cost per unit of 0.40 and 0.30. Total production cost accounted for is equal to the total cost to be accounted for. So for the journal entries, next period, the journal entries now in 6-4 for the journal entries. We now have the summary of cost of production reports. Department 1, we have the cost of 22,500 for materials, and then for labor, we are given the amount of here cost materials in Department 1, and we have now the cost of labor for each department: 7,2, 14,5, and 11,8. Factory overhead 4, 10,8, 14,500, and 8,850. These are now your cost of production for the month. Then for the total production cost for January, we are now going to deduct the work in process at the end of the month given in the report. Department 1, 6,500. Department 2, total of 17,500. And Department 3, 4, 5,630. So we now have your cost of production goods fully manufactured during January. Then for number 2, we debit to work in process departments 1, 2, and 3 with all these costs given. Then for second, we have 7, 2, 14, 5, and 11, 8, and for the third. Then we debit finally to work in process department 2 for 34,000. Work in process in department 2, credit to work in process in department 1. Finally, debit work in process in department 3, and credit work in process in department 2. Last entry, so debit 2, finished goods for 103,320. Now we have the final amount here, and credit to work in process in department 3. So now you have the figures considering all the departments for the month. Now in 6-4, finally, we have the cost of goods manufactured. We have the materials, labor, and factory overhead incurred during the period. So, for the given data in the problem. Then we have the total manufacturing cost, no work in process beginning, but we have the ending amount of 29,630. The difference is cost of goods manufactured during the month. So we now get the amount as required in the problem. Prepare a cost of goods manufactured. Then 6.5, calculate the cost of the completed production for November. And by the way, in 6.4, we are using the weighted average method man gihapon. 6.4. And in 6.5, we use compute the completed production cost for November. And the company uses the weighted average cost method. For the month of November, the company showed the following. So we have piece completed and canned, piece in process at the end of November, 100% complete as to piece, 50% complete as to labor and overhead, and zero complete as to cans. So we have now the cost data for piece, 10 per equivalent pound, labor 0.25, and overhead 0.15, and the cans 0.07. Compute the cost of completed production in 6.5. So we have now the completed units, and the costs are 245 for piece, labor 245, overhead 245 units. Now these are the units completed and transferred given in the problem. Then the inventory on June 30 for piece, 16,500 piece as at the end of November. So 100% complete as to piece, 50% complete as to labor and overhead. And for the total of the equivalent units, then we are going to determine the cost per unit at 10 centavos, 25 centavos, 15 centavos, and 0.07 as given in the problem. Completed cost of production is 245 units times 0.57. So we have now the cost of production. Cost of the ending inventory for piece given 16,500. Amo na ang ending inventory. You multiply by the cost per unit. That's equal to 10 cents. For labor, we have 8,250. That's equivalent production of labor here, multiplied by the per unit of 0.25. And for overhead, 8,250 here, the cans. No carrying unit cost. So we have now to show the detailed cost of the ending inventory. So this is the requirement of number 2. Next, we go to problem 6.6. Now, this problem already involves lost units. Required, prepare cost production summary, assuming that the production losses are considered to be normal. Monterey Products Company uses the process cost system. A record of the factory operations for the month of October follows. So for the production summary, we have the unit started 12,500, finished and transferred to stockroom 9,500. In process, at the end of the month, one half completed as to materials, labor, and overhead. So for the cost summary, we have materials, labor, and factory overhead. Prepare cost to production summary, assuming that losses are considered as normal. So for problem 6.6, our heading, Monterey Products Company cost of production summary. So we have the cost of production for the month given our materials, labor, and factory overhead. The total cost to be accounted for is $60,000. Now for the unit output started is 12,500 units and finished and transferred 9,500, and in process at the end of the month is 1,000. So we have the total units accounted for equal to 10,500 units. That's the sum of 95 and 1,000. So it shows that the units to be accounted for, the one that I dictated to you, that your units to be accounted for greater than the units accounted for, then the difference is lost units. Now, in the problem, the units to be accounted for is the unit started of 12,500. Then finished and transferred 9,500. In process, at the end of the month is 1,000. So the units accounted for is 10,500 units. Finished and transferred to finished goods during the month, 9,500. Equivalent units of work in process at the end of the month is a one half complete as to materials, labor, and overhead. So meaning we have only the EP of 500, meaning materials application is done evenly with labor and factory overhead, or even application of cost. So the equivalent production is only 10,000 units. So that you determine the unit cost for the month for materials, dividing materials with the EP, the same with labor and factory overhead. So for the inventory cost, the cost to finish and transferred 9,500 units times 6, the work in process at the end of the month is 500 ang EP multiplied by the cost per unit. So the total production cost of 60,000. Now actually you cannot see the lost units in the problem, but automatically you'll be able to determine if you try to use the formula that I gave you, that the total units to be accounted for exceeding the total units accounted for. The difference is lost units. So kung ang imo nga units to be accounted for is 12,500 and you can only account for 10,500, meaning you have 2,000 of lost units, which even if you cannot see in the report, but it's implied that you have 2,000 lost units. If you understand what I gave you in the formula, that if the total units to be accounted for exceeds the units accounted for, then the difference is lost units. Now, and still you cannot find lost units included in the report, but it's implied that the cost of the lost units are absorbed by the remaining good units. Now, if 2,000 units are lost, I hope you're following. If 2,000 units are lost, 2,000 is the difference between 12,500 units and 10,500 units. If 2,000 units are lost, then the cost absorbed by the lost units are absorbed by the remaining good units. That's why, how do we know that it's like that? The total cost of 60,000 is now divided only by 10,000 units. So it means that the cost per unit is 6 pesos. It could have been divided by 12,000 units if ever the lost units are clearly stated or are physically accounted. So that if you have 12,000 units or whatever number, depending sa stage of work done. Now, the cost per unit could have been lower as compared to 6. Kay ang 6, ang aton nga gingamit nga divisor is just 10,000. Kung ang gingamit naton 12,000 including the lost units, then the cost per unit is lower than 6. So that in the summary that I gave you last time, it was stated that if the lost units are considered to be normal, just like this, then the cost of the normal lost units will be absorbed by the products. So it's clear that the cost of the lost units are absorbed by the remaining units nga 10,000. The fact nga ang unit cost nila is 6, which is higher than the unit cost that could have been used if ever the units were not lost. So that means that the cost of the remaining units increased because of the absorption of the cost of the lost units. So ina kung ang lost units normal, the cost absorbed by the lost units uh, are part of the inventory cost, product cost. It increased the cost of the good units. Okay? So I hope you understand what is the effect of your lost units on the good units and how do we recognize the cost of the lost units. Normally, normal lost units, their cost will be absorbed by the remaining good units, or meaning as part of the product cost, where the cost per unit is higher as compared to if there is no lost units. Now we have 6.7 again. In 6.7, we have units gained, cost of production summaries, units gained. This is the reverse of your units lost. Lexington Chemicals Incorporated, which uses the process cost system, has two departments, A and B. In both departments, all of the materials are put into production at the beginning of the process. The materials added in Department B increase the number of units being processed by 1,500. Labor and factory overhead are incurred uniformly throughout the process in all departments. A record of the factory operations for May follows. So we have now materials, labor, and factory overhead in departments A and B. For the production summary units, departments A and B. Started in process, 10,000 units. Received from prior department, 8,500. Added to units in process, 1,500. Finished and transferred, 8,500. 500. Department B, 9,500. Units in process, end of the month, 1,500. And Department B, 500. Stage of completion, one-third and one-half. Required, prepare a cost production summary for each department for May. So in other words, we have to prepare a cost production summary for May. That's for each department. So we now begin with Department A, the cost of production for the month, the cost of materials, labor, and factory overhead with the total cost to be accounted for equal to 43,900. Then unit output for the month broken down into materials and labor and factory overhead. The total units to be accounted for in Department A is 10,000 units and accounted for into 8,500 and 1,500 ending inventory, one-third completed. So finished and transferred to Department B, 8,500 units. Then in process at the end of the month, 1,500 units. So all materials, because as stated, in both departments, all of the materials are put into process at the beginning of the month. So we have now all materials. So the EP for materials is 10,000. For labor and factory overhead, since the work done on the ending inventory is only one-third, so the EP is 500 for labor and factory overhead. Total equivalent production is 9,000. For the unit cost for the month, we have materials 25,000 divided by 10,000 for the equivalent production of materials. So we have 2.50. For labor, we get 1.20, and for factory overhead, we get the amount of 90 cents. Now using the individual equivalent production. So for the unit cost, we have the unit cost of 4.60. Now for the cost to be accounted for of 43,900, we now have the cost accounted for. Cost of finished and transferred to Department B during the month is 8,500 times 460 or $3,750. For labor, it's 1,500, but we multiply it by one-third. So only 500 times 120 factory overhead, 500 times 0.90. So the total production cost to be accounted for is now equal to the cost accounted for. That is in Department A. Now we move the goods from Department A to Department B. The goods received from Department A during the month, the cost of 39,100. Amuni ang units transferred from Department A to B. So we have now the cost of production for the month, adding materials, labor, and factory overhead. So all given. Total cost to be accounted for is 63,955. For the unit output for the month for materials, we have now the total equivalent production for materials of 10,000. For labor and overhead, it's only 9,750. So we determine the unit cost for the month. Materials, 7,500 divided by 10,000, the EP for materials. Labor, dividing it by its EP and factory overhead. So the cost per unit of 2.50. Now the inventory cost of goods finished and transferred to finished goods, we have 9,500 units times, now we have 3.91. Now initially we have 2.53. So we now have 3.91, and the cost in Department B of 9,500 units times 2.53. So we get the total cost of goods finished and transferred to the finished goods equal to 61,180. And now the cost of the work in process at the end of the month, we have now the cost in prior department of 500 times 3.91. 3.91 is taken by dividing the cost of 39,100, and we divide it by the 10,000 units. So the adjusted unit cost is 3.91. That is the adjusted unit cost. Whereas the cost in Department B, we are adding the unit cost of 2.53. So we now have the cost in the for the work in process 500 times 3.91. Then we have the cost in Department B for materials, labor, and factory overhead. So the total production cost is accounted for as 63,955. We have the calculation of the adjusted unit cost. Units from Department A, 8,500, and then the units added of 1,500. We have now the new quantity of 10,000 units. So the 39,100 cost is now apportioned among 10,000 units, getting a new unit cost of 3.91. Now, going back to the reports, actually we are still trying to determine in 6-7. Okay, in 6-7, we have in Department A transferred to Department B a total of, here we have 8,500 units times 4.60. Amo na ang iyang original unit cost of the units nga 8,500 transferred to Department B. So ang iyang nga cost per unit tag 4.60. However, if you will notice that in Department B, we involve 39,100 divided by 1,000, no, by 8,500 units, it's at 4.60. However, in the department, we are now adding 1,500 units, giving the adjusted quantity of 10,000 units. So the unit cost is now adjusted from 4.60 to 3.91. That's the adjusted unit cost. And 8,500, we are adding 1,500 units. So the new quantity is 10,000 units in Department B in lieu of 8,500 units. So we now compute for the cost of goods finished and transferred to the finished goods. We now have 9,500 units at 3.91 and at 2.53. So 9,500 units completed, and we have another 500 units in process at the end to make up for the total of 10,000 units in Department B. So you now involve the adjusted cost per unit. So again, units gain from 8,500 to 10,000. Now in 6-A, we have the FIFO cost method. Daytona Beverages Incorporated uses the FIFO cost method and adds all materials, labor, and factory overhead evenly to production. A record of the factory operations for October follows. So we have the beginning inventory of 5,000, started 13,000. The units to be accounted for is 18,000 units. Finished and transferred to stockroom, 11,000. Ending inventory units, 7,000. Three-fourths completed. Then for the cost summary, work beginning of the month, 10,000. We add materials, labor, and factory overhead. Then we have the cost of production summary for the month. So in 6-8, we now have the cost of work in process at the beginning of the month, given beginning of the month. So we are going to add the cost of production for materials, labor, and factory overhead. So the total cost to be accounted for is 100,000. The unit output for the month is, if we have the units to be accounted for of 18,000 units, we have now the completed units equals 11,000 units given in the problem. However, this includes the work in process inventory, one-fourth completed of 5,000 units. So to complete the beginning work in process, 5,000 units, we multiply this by 3/4 because the work done during the previous period, that's the work in process beginning, is only 1/4 completed. So during the period, we add the 3/4. That gives the a unit output for the beginning inventory equal to 3,750 units. Then a units started and finished during the month, 11,000 units. We deduct the 5,000 beginning inventory, so just started and completed. And the ending inventory units of 7,000 units, given 7,000 units, three-fourths completed. So we have 5,250. The equivalent production is 15,000. Now again, take note that we are using the FIFO cost method. For the unit cost, we have materials 3, labor 2, and factory overhead 1. Now we are given the cost of production during the current month, and we divide this by the equivalent production. Okay, we divide this by the equivalent production of 15,000 units. Now for the inventory cost, the cost of goods finished and transferred to the finished goods during the month. The beginning work in process given is the prior month's cost of 10,000. Current cost to complete, we multiply 5,000 times 3/4. That's the cost to complete. So 5,000 times 3/4, we have 3,750. So we now have 5,000 times 3/4, and we multiply it by the cost per unit. So 3, 2, and 1. So we now get the materials unit cost, and you multiply by the equivalent production. The same with labor and factory overhead. So the cost of the beginning inventory of 5,000 units and now completed is 32,500. That's the cost of 5,000 units that you forgot here. Take note that our materials, three-fourths, atom labor, three-fourths, factory overhead, three-fourths. In other words, this is even cost application. The application of materials is just equal to the application of labor and factory overhead. So we involve even cost application. So the cost of the work in process beginning of 5,000 units and now completed is $32,500. For the units started and finished during the month, we have 11,000 minus 5,000. We have 6,000 units times 6. So we have now the cost of the completed units for 68,500 and the cost of the work in process at the end of the month given at 7,000 units, three-fourths complete. So we multiply the units by three-fourths for all the elements, and then you multiply by the corresponding cost per unit. So the total production cost accounted for is 100,000. The total cost to be accounted for is 100,000. So that to be accounted for and the accounted for should equal each other. Now in 6.9, required is calculate the cost of the pounds completed and transferred to finished goods. Clearwater Candy Company had the cost per equivalent pound for the month, 4.56 for materials, 175 for labor, and 1 for overhead. During the month, 10,250 pounds were completed and transferred to finished goods. The 3,200 pounds in ending work in process were 100% complete as to materials and 60% complete as to labor and overhead. At the beginning of the month, 1,500 pounds were in process, 100% complete as to materials and 50% complete as to labor and overhead. The beginning inventory at the cost of 8,775. Clear water uses 5.4 costing. Okay, calculate the cost of the pounds completed and transferred to finished goods. Calculate the cost of the ending work in process. So we have now the cost of units completed and transferred, beginning work in process of 8,775. The cost to complete materials is already 0 because here we have the materials cost per equivalent pound for 4.56 and the cost per equivalent pound. During the month, 10,250 pounds were completed and transferred to finished goods. And we have the ending inventory of 3,200 pounds in ending work in process. Okay, so how do we calculate the cost of the pounds completed? Beginning work in process is given 8,775. Cost to complete materials is 0, because you are given at the beginning of the month 1,500 pounds, were in process 100% complete as to materials and 50% complete as to labor and overhead. That's why you have no more materials applied during the period because all the materials were applied in the previous period. So you only apply the labor and overhead. The work done is 50%, and you multiply this by the corresponding cost per unit for the month of. So we have now labor and factory overhead. So completed cost of the beginning inventory of 10,838 for the beginning inventory. Units started and finished. So 8,750, and then we multiply this 8,750, we multiply by 4.56, 175, and 1, as these are the given cost per unit, and the overhead is at 1. So we now get the completed cost of the beginning inventory. Units started and finished, 8,750 plus 4.56175 and 1. Cost of goods completed and transferred. Units completed and transferred, 10,250. Beginning inventory 1,500. So we have just started and finished during the current period. Cost of the units in ending inventory 14,592. We have the corresponding computations. Labor is 3,360 and the overhead of 1,920. We have the cost of the ending inventory in problem 9. Next, we have problem 10. Still have problem 10, 11, 12, and 13. So in problem 10, a weighted average and 5 focused methods, losses at the beginning and end of processing. Mount Palomar Manufacturing Company uses a process cost system. Its manufacturing operation is carried in two departments, machining and finishing. The machining department uses the weighted average cost method, and the finishing department uses the FIFO cost method. Materials are added in both departments at the beginning of operations, but the added materials do not increase the number of units being processed. Units are lost in the machining department throughout the production process, and inspection occurs at the end of the process. The lost units have no scrap value and are considered to be a normal loss. Production statistics for July show the following data. So machining and finishing. In process, we have in process July 1, all materials 40% labor and overhead. Units in process July 1, all materials 80% uh, of labor and overhead. That's in the finishing department. Units started in production 140,000. Units completed and transferred 100,000. Units transferred from machining 100,000. Units completed and transferred to finished goods 100,000. Units in process on July 31, all materials 60% of labor and overhead 40,000. Units in process July 31, all materials 40% of labor and overhead 40,000 and units lost in production 20,000. Production cost, we have now the production cost for machining and finishing, the cost of materials, labor, and factory overhead, and the cost in machining department. For the production cost, we have costs incurred during the month for materials, labor, and factory overhead required. Prepare a cost to production summary for each department. Round unit cost to three decimal places. Which department will have an easier time determining how its unit cost compare from month to month and why? So in 610, we begin with the machining department, and as stated, the machining department in 610, the machining department uses the weighted average cost method, while the finishing department uses the FIFO cost method. So bali ang machining gagamit sa average cost method, and the finishing department uses the FIFO cost method. Materials are added in both departments at the beginning of operations, but the added materials do not increase the number of units being processed. So we now begin with the machining department, okay? Machining department. A weighted average cost method for the month ended July 31. Cost of the work in process beginning of the month given are your materials, labor, and factory overhead for the machining department. So we have the cost of materials, labor, and factory overhead of 40,000, 24,000, and 8,000. So the total cost of the work in process beginning of the month is 72,000. Then the cost of production for the month is adding materials, labor, and factory overhead, 280 sa machining na 180 and 60. So the total cost to be accounted for is 592,000. The total cost to be accounted for is 592,000. The unit output for the month, okay, the unit output for the month. For materials, finished and transferred during the month, 100,000. Equivalent units of work in process at the end of the month is 40,000. So the total equivalent production of 140,000. Labor and overhead, 124,000. Now, these are all given in the problem that the units transferred in the machining department is a total of units completed 100,000. Ang to be accounted mo, amo ni ang 140,000. So ang finished 100,000 and the work in process at the end of 40,000. So we have the total of 140,000, the total number of units to be accounted for. Kag ang equivalent production of 140,000 for the equivalent production. For labor and factory overhead, equivalent production is 124,000. So the unit cost for the month, these are taken by adding materials, divided by EP, labor, adding labor cost, divided by EP, and the same with factory overhead. So we have the cost per unit of 4.479. For the inventory cost, for the inventory cost, we have the cost of goods finished, cost of goods finished and transferred, 100,000 amo na ang finished goods times 4.479, so 447,900. Then the cost of work at the end of the month, 40,000 materials, all applied times 2.286, labor 40,000 times 50%. So that means 24,000. And factory overhead also of 24,000. So the total production cost to be accounted for is 591,972 with a rounding off discrepancy equal to 28. Okay, so we have now the machining department. Next, we have the finishing department using the FIFO cost method. It's the machining department that uses the weighted average cost method, whereas in the finishing department, the method used is FIFO. So we now have the cost in the machining department for the beginning inventory, the cost in the finishing department given 110, 60, and 40. So the total of 210. And the total cost to be accounted for is 450. The cost in machining of 240,000, that's the cost transferred. Okay, that's the cost transferred. So the cost in the machining is equal to 240,000. And we have in the finishing 210 total cost to be accounted for. Cost of goods received from machining iniya work beginning ni of 240,000. Okay, work beginning. And we have the cost here. Cost of goods received from machining during the month. We have 447,900. 447,900. And we have now the cost production for the month given materials, labor, and factory overhead. So the total cost to be accounted for is 1,377,900. So the unit output for the month to complete the units beginning, material is 0 because materials are added at the start of the process. So we have units started and fully manufactured in the finishing department. Actually, you begin with 100,000 units in the finishing department. Okay, so we have now your units started and fully manufactured 60,000. That includes the beginning inventory, but you have no more material application. So the ending inventory, all materials, 40,000. So the total equivalent production is 100,000. Labor and factory overhead to complete the beginning work in process and in 40,000, we apply labor and factory overhead unit started, and then we have the work in process at the end of the period. Unit cost for the month, 240,000 divided by 100,000 as our EP. And we divide labor, 84,000. So we get now the unit cost of 5.257. We are using the FIFO cost method in the finishing department. Now, another requirement in problem 610 is in number one, the cost production summary. So this extends up to the prior month's cost of 450,000, and we are adding the current cost to complete uh, 40,000 times 20% times 1.905 and times 0.952. Units started and finished during the month, 60,000, and we multiply this by the unit cost of 4.479. The cost in finishing is 5.257. So the total cost transferred is 60,000 times 9.736. So the total cost transferred of 584, 160. So the work in process at the end of the month is cost in prior department, 4.479. Material cost in this department, 40,000 times 2.4 fully applied. Labor is only 40% and factory overhead. So the rounding off difference, we have the total cost accounted for. Actually, there's a difference of 12. Okay, so the finishing department will have an easier time determining how unit costs compare from month to month because it uses FIFO. Note how in this problem a separate unit cost of 5.257 was completed for July 1, where the unit cost of 4.4794, the managing department using weighted average costing was computed using a combination of last month's and this month's cost and units produced. Now we have 6-10. And finally in 6-11 and 6-12, we have the joint cost allocation. So in 6-11, joint cost allocation. Auto Incorporated specializes in chicken farming. Chickens are raised, packaged, and sold mostly to grocery chains. Chickens are accounted for in batches of 50,000. At the end of each growing period, the chickens are separated and sold by grades. Grades A, E, and A are sold to large grocery chains. B and C are sold to other buyers. For costing purposes, Otto treats each batch of chicks as a joint product because data for a batch of 50 chicks follow. So we have now grade A and A number of chickens, 25,000 and 15,000. Average pounds per chicken, selling price per pound. So we now have the total joint cost for the batch of $125,000. So total joint cost for the batch were $125,000. Compute the cost allocation for each product using the sales value split off method. Round sales value percentages to 5 decimal places. So we now have in problem 11 the four types of products of auto. So we have now the products A, B, and C. Sales value at split off. So sales value at split off for A 125, BB 45, and the total 177,000. So with 25,000 times 5 equals 125,000. Then we have the average pounds per chicken, no? That's the sales value at split off is 1. So 125 times 1 is 125. Then 15,000 times 4, 60,000 times 0.75 is 45,000. B 6,000 times 2 equals 12,000. So the sales value is 6,000. C, we have 4,000 times 0.25. So we have 1. The total cost is 177,000. Sales value percentages. So the total of 1. The joint cost of 125,000. So we now multiply the joint cost by the sales value percentage. So we get the allocated cost of 125,000 times 0.70621. In other words, a bigger or the biggest portion of the sales is that of AA. So you will notice that the joint cost, you have only one joint cost, but only that you are allocating the cost. The allocated cost is 125,000. Now, as required in 6-11, compute the cost allocation for each product using the sales value at split off. So in 6-11, we allocate the 6 value uh, with a total 177,000. And we have now the sales value at split off used in the allocation. 6-12 for 6-12 joint cost allocation with cost after split off and byproduct revenue. Texas Oil Company transports crude oil to its refinery where it is processed into main products, gasoline, kerosene, and diesel, fuel, and by-oil-based oil, byproduct-based oil. The base oil is sold at the split-off point for 500,000 of the annual revenue. The joint processing costs to get the crude oil to split off are 5 million dollars. Additional information includes. So we have the barrels produced, cost after split off, selling price per barrel, and we have the product. Determine the allocation of joint cost using the net realizable value method, rounding the sales value percentages to the nearest tenth of a percent. Hence, reduce the amount of the joint cost to be allocated by the amount of the byproduct revenue. So we have now the products. We have three products, gasoline, kerosene and diesel oil. We have the barrels. Then we have the price per barrel. We have the ultimate sales value. Then we have the cost after split off given at 2,500,000 and 1,000,000. So we now get the sales value at split off. 50,000 minus 2,000 equals 48,000. 500,000 deducted from 8 million equals 7.5 million, and diesel foil for 14 million. For ultimate sales value, we have 73 million. Cost after split off 3.5 million. Sales value at split off of 69.5 million. So we have the product and the sales value at split off. We have the percentage, 48 million divided by 69,500. So we get 69.1. 7,500,000 divided by 69,500, we get 10.8%. 14 million divided by 69,500 or 20.1%. So joint cost assigned of 4,500,000 as the difference between 5 million and 500,000. Now the last problem here is 6-13. 6-13, we have the joint cost allocated. So we have now the joint cost allocation with cost after split off and byproduct revenue. Venezuela Oil Incorporated transports crude oil to its refinery where it is processed into main products, gasoline, kerosene, and diesel oil, and byproduct base oil. The base oil is sold at the split of uh, point for 1 million of annual revenue, and the joint processing cost to get the crude oil to split off are $10 million. Additional information includes. So we have now the product, gasoline, kerosene, and diesel oil. The barrels produced 400,000, 100,000, and 300,000. And we have now the cost after split off of 8 million, 3 million, and 2 million. Selling price per barrel 98, 85, and 70. Determine the allocation of joint cost using the net releasable value method, rounding the sales value percentages to the nearest tenth of a percent. Hint, reduce the amount of the joint cost to be allocated by the amount of the byproduct revenue. So we have now 6-13. We have the gasoline, kerosene, and diesel oil. The barrels, for the barrels, 400,000, 100,000, and 300,000. And we have now your price per barrel of 98, 85, and 70. So the ultimate sales value 39,200, 8,000, 8,500,000, and 21 million. So the total ultimate sales value of 68,700,000, and the cost after split off We have 8 million for gasoline, 3 million for kerosene, and 2 million for diesel foil. And we have the sales value at split off. Okay, so again, we have the product, sales value at split off. We have the sales value percentage and the joint cost assigned. So we have the total joint cost assigned of 9 million. Here we have 10 million minus the 1 million. We have the cost of 9 million. That's now your joint cost assigned. Okay, the last problem here is the mini case. In the mini case, we are required to calculate the allocation of joint cost, calculate the total cost per unit of each product. 3. In examining the product cost reports, Lois Lane, Vice President Marketing, notes that the per unit cost of tantalum is greater than the selling price of 2.75 that can be received in the competitive marketplace. Lane wonders whether they should stop selling tantalum. How did Lane determine that the product was being sold at a loss? What per unit cost should be used in determining whether tantalum should be sold? So we have now the allocation of joint cost. In the mini case, Clark Kent Incorporated buys Krypton for 80 cents a gallon. At the end of processing, Department 1, Krypton splits off into products plutonium, tantalum, and xenon. Plu- Plutonium is sold at the split off point with no further processing. Tantalum and xenon require further processing before they can be sold. Tantalum is processed in Department 2 and xenon is processed in Department 3. Following is summary of cost and other related data for the year ended December 31. So we have now the three departments, departments 1, 2, and 3. And we have the cost of Krypton, direct labor, and factory overhead. We have the gallons sold, gallons on hand, that's the inventory, and the sales in dollars. No inventories were on hand at the beginning of the year, and no Krypton was on hand at the end of the year. Okay, no inventories at the beginning and no Krypton was on hand at the end of the year. All gallons on hand at the end of the year will complete as to processing. Kent uses the net realizable value of allocating joint cost. So number one, calculate the allocation of joint cost. So we now have the allocation of joint cost into four. Uh, Here we have the products, plutonium, tantalum, and xenon. Units produced for 30,000 for plutonium, 30,000 for tantalum, and 60,000 for xenon. Now units produced 30,000 for plutonium is the sum of gallons sold and the gallons on hand. For tantalum, only gallons sold. And for xenon, gallons sold and gallons on hand, 60,000. The unit selling price is at 150 for plutonium, 320 for tantalum, and 3.15 for xenon. Now you have the computations. $30,000. $30,000 divided by for the gallon sold. So unit selling price is 150 for plutonium. Since the sales in dollars is 30,000, you divide that by 20,000 gallons. So you have 1.50. For tantalum, we are given 96,000 divided by 30,000 gallons. So we take 3.20. And for xenon, we have 141,750 divided by the number of gallons sold of 45,000. So the ultimate sales value, we now have 45,000, 96,000, and 189,000. Less cost after split off. Less cost after split off. Plutonium 0, tantalum 77, 500, and xenon 114,000. Then for sales value at split off, we have 45,000, 18,500, and 75,000. Percent of sales value now taken by dividing 45,000 by 138,500. So we now get the total of 100%. Allocation of joint cost of 100,000. Okay, so for the beginning inventory, 0, you sold during the year, end of the year inventory. So we now get the total units produced during the year. So at least we have the solution. Okay, so in number 2, calculate the total cost per unit. Total cost per unit for each product. So the unit cost of plutonium is 32,500 divided by 30,000 gallons. So you have 1.08 per gallon. Then the unit cost of tantalum, 51,000 divided by direct labor plus 26,000 of 500 of factory overhead. Then we add 13,400 of joint cost equals 90,900 divided by 30,000 gallons. So you get 3.03 per gallon. And the unit cost of xenon, 65,000 direct labor plus 49,000 factory overhead plus 54,100 joint cost of 168,000 divided by 60,000 gallons times 2.80 per gallon. So you may want students to read the differential cost analysis section of chapter 10 before attempting part 3 of this case. Alternatively, you may wish to change them with part 3 to see if they can determine the relevant items to this decision without first teaching them the concept. The joint cost of 13,400 that's allocated to tantalum should be ignored in deciding whether or not it should be sold. The joint cost, a past cost that it had to be incurred just to get all three products to split off. It will still be 100,000 even if the tantalum is not marketed. A comparison should be made between the selling price per unit of 2.75 and the separable cost incurred after split off of 2.58. Now, therefore, tantalum provides incremental income of 17 cents per unit, and it should be processed beyond split off and then sold. Okay, so thank you for your listening our lecture, and I hope you will study this, especially your equivalent production.